Ever wondered how Warren Buffett, one of the world's most successful investors, would approach investing in 2024? His strategies are timeless, but adapting them to today's economic environment can give you a significant edge. Let's dive into Buffett's top investment principles, from finding intrinsic value to staying patient in volatile markets, and see how these can help you grow your wealth this year. 1. Invest in businesses with intrinsic value. One of Buffett's most frequently reiterated pieces of advice is to invest in companies with intrinsic value. But what does that really mean? Simply put, it refers to businesses that possess qualities allowing them to thrive regardless of external market conditions. Companies with solid, sustainable business models, strong leadership, and valuable products or services fall under this category. For example, in 2024, Apple remains a prime example of intrinsic value. Despite high product prices, Apple's ecosystem, from iPhones to its services like Apple Music and Apple TV, ensures customer loyalty and recurring revenue streams. Buffett's strategy involves looking beyond short-term profitability to find companies that have built long-term value. In 2024, the economic environment presents numerous challenges, including higher interest rates and potential recession threats, but Buffett emphasizes sticking with companies that have the fundamentals to weather these storms. Firms with intrinsic value are able to sustain profitability and market leadership, even in volatile times. That's why Buffett advises keeping an eye on businesses that not only meet the demands of today, but also anticipate and create solutions for future needs. Investors can apply this principle by thoroughly researching companies, analyzing their balance sheets, and understanding the core of their business models. When markets fluctuate, businesses with intrinsic value often recover more quickly than others because of their robust foundations. Buying and holding these companies, even through market dips, has been Buffett's formula for success. 2. Focus on long-term investments. Warren Buffett is the epitome of patience in the investing world. One of his most famous quotes, "Our favorite holding period is forever," underlines his commitment to long-term investing. For 2024, this philosophy is especially relevant given the unpredictable nature of the markets. With uncertainties such as inflationary pressures and potential economic slowdowns looming, short-term market movements are expected to be volatile. But according to Buffett, the key is to ignore these short-term noise and focus on the long-term potential of your investments. By concentrating on long-term gains, you allow compounding, one of the most powerful forces in investing, to work in your favor. The longer you hold a quality asset, the more opportunity it has to grow exponentially. Take Coca-Cola, a staple in Buffett's portfolio. Despite occasional market corrections, its long-term trajectory has been one of consistent growth, largely due to the company's global brand strength and loyal customer base. Buffett's long-term focus also helps mitigate emotional decision-making. It's easy to panic and sell during market downturns, but Buffett advises staying the course with your investments. Selling based on fear leads to missed opportunities for growth. Instead, trust in the quality of the companies you've invested in and give them the time they need to realize their full potential. This strategy has made Buffett one of the wealthiest people in the world, and it can help everyday investors build wealth over time too. 3. Stay patient and avoid emotion-driven decisions. Patience is a virtue, especially in investing. One of Buffett's primary lessons for investors in 2024 is to remain calm and rational, even when markets become turbulent. His well-known quote, "The stock market is a device for transferring money from the impatient to the patient," speaks volumes about the dangers of making impulsive investment decisions. In today's fast-paced, information-heavy world, it's easy to get swayed by headlines or market sentiment, but Buffett advises keeping emotions in check. Investors who trade based on fear or greed often make poor decisions, selling assets at a loss during a downturn or buying overvalued stocks during a market boom. Instead, Buffett encourages a methodical approach. Focus on the fundamentals of the companies you're investing in and resist the urge to react to short-term price fluctuations. In 2024, economic uncertainty will likely continue to drive market volatility, making it even more important for investors to stick to their long-term strategies. Whether it's inflation concerns or geopolitical tensions, staying patient during times of crisis allows you to capitalize on opportunities. Buffett sees market corrections as buying opportunities, not moments of panic. By keeping the cool head and sticking to your plan, you can make informed decisions that build wealth over time, rather than lose out by chasing quick gains. 4. Keep costs low. One of the simplest yet most effective pieces of advice from Warren Buffett is to minimize the costs of investing. High fees can erode your returns over time, making it harder to achieve your financial goals. For 2024, this advice is particularly relevant as more investors are turning to low-cost options like index funds. Buffett has long been a proponent of the S&P 500 index, citing its low cost and broad market exposure as ideal for most investors. Expense ratios, trading fees, and advisory costs can all eat into your returns. Buffett's solution is straightforward. Stick to low-cost funds and minimize unnecessary trading. The fewer fees you pay, the more of your money stays invested and working for you. He has repeatedly emphasized that many investors would be better off putting their money into an index fund rather than attempting to beat the market through active trading. This principle applies to investors of all sizes, from beginners to seasoned professionals. Reducing fees and costs is a guaranteed way to improve your long-term returns. 5. Don't fear volatility. Finally, Buffett's advice for 2024 encourages investors to embrace volatility, not fear it. Market swings are inevitable, but instead of seeing them as a risk, Buffett views them as opportunities to buy high-quality companies at discounted prices. His famous quote, "Be fearful when others are greedy and greedy when others are fearful," highlights his contrarian approach. Volatility often makes people nervous, leading to emotional decisions that hurt their portfolios. But Buffett uses periods of uncertainty to his advantage. When markets decline and stocks fall, many investors panic sell, driving prices even lower. This is when Buffett steps in to buy. He's always on the lookout for strong businesses that are undervalued due to temporary market conditions. In 2024, with the potential for economic slowdowns, this mindset can be a powerful tool for investors willing to take advantage of lower stock prices. By understanding that volatility is a natural part of investing, you can learn to use it to your benefit. Instead of focusing on short-term losses, think about the long-term potential of your investments. As Buffett advises, volatility is an opportunity if you're patient and selective about your investments. Thanks for tuning into Smart Money Zone. If you found this video helpful, make sure to like and hit subscribe for more smart finance tips coming your way. Don't forget to smash that notification bell so you're the first to know when we drop new content. Got any questions or topics you'd love us to cover? Let us know in the comments below. Let's grow our financial future together. See you in the next one.